Kind of stuck in your financial journey? Well, you are in the exact right place.
It's the ultimate question, isn't it? How on earth do you build wealth from absolutely zero? I mean, no loans, no existing job, and definitely no massive pile of capital to start with. Well, today we're laying out a reliable, data-backed blueprint to help you escape financial stagnation. And spoiler alert, this isn't about getting lucky. It's about really understanding the mechanics of money.
I want you to think back to the 1930s, right in the brutal depths of the Great Depression. Unemployment had hit 25%, and people literally barely had enough to eat. But in that exact environment, F.C. Meneco wrote a book called 1,000 Ways to Make $1,000. His core message? Making money is a learned skill, not just a stroke of luck. It's a methodology that anyone can learn. And honestly, the principles he laid out back then are just as undeniably true today.
Okay, here's our roadmap for this explainer. We'll start with the wealth-building mindset, cover the first 3 principles, learn to scale and create value, move to the SIP growth strategy, avoid those common investment mistakes, and finally, master time and discipline. Let's get into it.
Starting off with Section 1, the wealth-building mindset.
Moving right along to Section 2, the first 3 principles.
So our focus today is really to explain the 6 core business principles. Let's completely dismantle how the first 3 actually work in the real world. Finding the problem, selling first, and selling expertise over time.
Principle 1 is super straightforward. Find the business in the problem. Because where there is a problem, there's money. Now, most people look at a problem and just complain, right? But a smart entrepreneur looks at it and asks, okay, who wants this fixed and will they actually pay for it? Take an everyday example. Elderly neighbors who don't know how to use smartphones. Complaining about them not being tech-savvy is just the wrong approach. And honestly, it's not going to make you any friends. The right approach is seeing a real problem you can solve. Maybe teaching them WhatsApp video calls or UPI for a couple of hours a week for a small monthly fee. Or look at Fanindra Sama. Back in 2005, he was incredibly frustrated because he couldn't get a bus ticket for Diwali. Instead of whining, he took that frustration, started with just 5 lakh rupees, brought the whole offline bus booking system online, and by 2013, he sold Redbus for 800 crore rupees. Pretty amazing, right?
Now, Principle 2 sounds kind of backwards at first, but it's actually a massive, risk-free methodology. Sell first, build later. The traditional, flawed approach is spending 6 months and literally all your capital building a product. Say, setting up a massive commercial kitchen for a tiffin service, only to launch and realize absolutely nobody wants to buy your food. The modern, smart approach? Message 10 friends in your neighborhood and just ask if they'd buy a daily home-cooked meal delivery for 100 rupees. If 5 of them say yes and actually commit, well, then you go build the kitchen. You gotta find the customer and secure that commitment before you deliver.
Principle 3 is where you really start to scale yourself. Sell expertise, not time. Look, if you work a regular job, your earnings have a very strict ceiling because your time is limited to 24 hours a day. But if you sell your expertise, you completely break that ceiling. Think about a chartered accountant working on a salary. They make a fixed amount. But if that exact same CA advises 5 small businesses part-time, charging each of them separately, they make the same or even more without that grueling full-time hours commitment. And hey, if you think you don't have expertise, think again. If you know how to use Excel, Canva, edit video reels, or write AI prompts, you have skills that others definitely don't. So package what you know and sell it.
Let's jump to Section 3, scale and create value.
These final 3 principles round out our 6 core business principles. We've got the magic of repeat business, starting small but thinking big, and creating value. These are the true secrets behind business longevity and creating completely unbreakable customer loyalty.
Principles 4 and 5 just perfectly complement each other. Principle 4 is all about retention over acquisition. Did you know finding a new customer takes 5 times more energy than selling to an existing one? It's true. A smart house painter doesn't just take your money and run. They call you back 6 months later, right after the rains, to check for dampness. That right there creates repeat business. Then Principle 5 is start small, think big. A home baker doesn't start with a massive industrial factory. They start by making a chocolate cake for their friends, they scale to a nice Instagram page, and eventually they're handling massive corporate orders. I mean, even McDonald's started as a tiny roadside burger stall. Start small, take that very first step, but always keep that grand vision in the back of your mind.
So to wrap up the active income phase, we have Principle 6, create value and the money will follow. If you just run after money, it tends to stay away. But if you focus on adding immense, undeniable value to someone's life or business, money naturally flows to you. Just compare an average freelance video editor who simply cuts the video exactly as told to a highly valuable worker. That valuable worker edits the video, sure, but they also suggest a much better thumbnail, and they recommend changing a 15-second reel to 30 seconds for better algorithmic performance. That second worker commands way higher pay because they aren't just selling a basic service, they are providing undeniable value.
All right, moving to Section 4, the SIP growth strategy.
Enter the Systematic Investment Plan, or SIP. Basically, this is a highly disciplined, fully automated method of investing a fixed sum regularly into mutual funds, which are heavily regulated by bodies like SEBI. Honestly, an SIP is the ultimate modern manifestation of Principle 5 from earlier, starting small and thinking big.
Just look at the historical data. Over a 15-year horizon, SIPs and benchmarks like the Nifty 50 have returned around 13.82%, and the broader Nifty 500 has done around 14.89%. And let me ask you, did you have to do extensive back-breaking financial research to get this? Nope. Did it consistently destroy standard 4% fixed deposit returns? Absolutely yes. But more importantly, it outpaces a very silent wealth killer. And that silent killer? It's inflation. Consider this pretty stark reality for a second. If your child's higher education costs 10 lakhs today, and we assume a conservative 5% inflation rate, in 10 years, that exact same education will silently balloon to 16.3 lakhs. If your money isn't growing at a rate that beats inflation through vehicles like equity mutual funds, you are literally losing purchasing power every single day.
Which brings us to Section 5, avoiding investment mistakes.
Here's the truth. SIPs don't really fail. It's the investors' mindsets that do. There are some incredibly common human errors that completely derail investments. People expect massive, life-changing returns in just 3 to 6 months. Or, when the market crashes, they completely panic sell, instead of realizing that market dips just mean buying strong companies at a discount. They blindly chase risky, narrow themes like EV funds just because it's quote-unquote trendy, instead of sticking to reliable caps. Worse, they treat their SIP like a personal ATM, pulling money out the absolute second they want to go on a vacation. And finally, they rely entirely on those simple online calculators, but totally ignore the 12.5% long-term capital gains tax on equity mutual funds, leaving them way short of their actual financial goals.
Now, you might be wondering, what if my income is just too low right now to reach those massive goals? The answer is the Step Up SIP. This is absolutely the ultimate practical solution for young professionals. You just start with whatever you can rigidly commit to, even if it's super small. But as your career advances and your salary grows, you automatically increase your investment amount by just 10% every single year. You will barely even feel the pinch. But over a 20-year long-term horizon, this one simple upgrade pushes you organically from the thousands right into the multi-crore zone.
And our final section, Section 6, Time, Discipline, and Wealth.
The final wealth equation is remarkably simple, yet it's incredibly hard for most people to actually follow. Time plus discipline equals wealth. That's it. True financial freedom doesn't require complex rocket science. It just requires avoiding the daily market noise, ignoring that nagging urge to constantly time the market, and staying fiercely committed to your foundation. You really must have the discipline to consistently provide value to your customers on the active side, and the absolute patience to let your investments compound on the passive side.
So I want to leave you with this provocative challenge. You now have the 6 core business principles to generate active income. You have the step-by-step growth strategy to protect and multiply it. So what are you going to do? Are you going to keep complaining about the system?